Dude, what the? What the? Jesus. Man, today's just not going. Today's just not my day. Alright, this is a test of the Benzinga pre-market prep stream. Trying to find out if there was an echo. So
Testing 1 2, testing 1 2.
if you are in the chat and you hear me, that's great. If you hear an echo, not so great. So
Test 1 2, test 1 2. Maybe it's okay.
Alright, I think we're good then. We're going on mute.
Okay. Maybe it's okay.
Alright, I think we're good. We're going on mute. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors, and welcome to this Thursday, December 15th edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim and a freezing cold Detroit right now. I'm Spencer Israel here with Joel Elconin and Dennis Dick, trying out a little bit different video streaming service today, so hope everything goes smoothly, and if you hear any echoes or anything of the like, please don't hesitate to let us know in the chat. On today's show, so we got to talk about gold. Gold is trading across the board today. We've also got to hit on that little Fed decision from yesterday and the reaction from across the market. We do have some valiant headlines this morning. Eli Lilly had some guidance as well. And I think GE had some had guidance, and so we got enough to cover on the show today. Plus a couple of guests at 8:15. Adam Sarhan, he's the founder and CEO of Sarhan Capital, and then at 8:35, Tracy Shookhart will join us. She is an independent commodities trader. She's had a pretty long career, and Joel says she is hilarious. So I trust him. His opinion on that. In the meantime, Joel, tell us how we're doing in the S&Ps.
We are trading in the red here by $3.50. Pre-market high 57.75, so that'll be a target on the upside if we can get there. Got to get above the close 42.52 even. Yesterday's low 43.70, 43 even. Not going to get real excited if we take that out because you got your 4-day low at 39.75. Crude, who will talk with Tracy about the crude oil market, under $51. Peeling back there, see if anybody's really cooperating with this OPEC agreement. And gold and silver getting destroyed today. Gold down $34. Silver off $1.02. Dennis, the end of the metals markets, huh?
Oh, man. Gold getting hit hard here again today. It's just been the end of the metals markets. And again, it's the morning, so I can't talk. But it's been the end of the metals markets back in the summer when everybody had to be in the miners, and you saw stocks like Barrick Gold going. And from January, it started at $7 and got all the way up to $23. Obviously, we've pulled significantly back off those highs on all of these gold miners here now. Gold Corp ran from $9 to $20. It's back at $12. Newmont ran from $16 to $46. It's back at $31. Agnico Eagle Mines, same story. A lot of these stocks down more than 50% from the highs. And again, same thing. Everybody wanted to own. They had to own gold in the summer. And now you can see what happens here. It's all about, sentiment. If you're fading sentiment, you can sometimes be early, but if you're trying, to call a top on things, it can be tough too. But eventually, these things, when they get overdone, eventually they pull back.
And it's just, you had the rally and, the dollar's strong, market is strong. I mean, I guess people want to put their money anywhere but in the gold market here. Gold just started out, just look at the chart. I mean, I think it's still positive for the year here. It's going to be interesting if it can end up that way. We started the year just above the 1050 level, giving back a lot of those gains here. Maybe that 1,000, I mean, that's still $130 away from here, but who knows? Who knows where this break will end? And I had noticed that gold had been weak over the last couple of days, but silver kept trying to poke its head above 17, but now much closer to 16 than 17.
Yeah, silver pulling back significantly too. The big one, if you're trading equities there, Silver Wheaton's a good one that trades off of silver, SLW. I trade it sometimes, and if you look at the highs, it got up over $30 in the summer. We're now trading down 18, so you got to analyze here. And I've been underweight gold and silver forever in my portfolio. I have a little bit of SLV, but it's less than 1% of my portfolio. And people say, well, you have to have that for insurance. I don't know if I buy that or not, if you need to have it in there for insurance or not. I mean, if you want insurance, you can go out and buy options, or you can do some different ways to do it. I'm not sure gold and silver is the best insurance for your portfolio. Because when if you're dropping, what is if the markets fall 20-30%, let's just say hypothetically, Is, a 5 or 10% or 20% pop in gold, if you only have 5 or 10% of that in your portfolio, really going to help?
Nope.
So there you go. Best way for insurance, if you're really worried about the markets, is probably to buy outside puts. But in any regard here, I don't know. I look at it here. If you're buying it now, at least you're a lot better off than you were from the summer. But I just don't know if the luster in the metals is still there. Like, okay, you can say it's a currency, you can say it's an alternative, but really, the value of metal is, people like to wear it, and you just don't see people wearing gold anymore.
All right, Violin Maker says insurance against stupidity here, but $18 for the silver wheat, and Larry likes it long term, but now taking out that $18 level, which had been supported over the last couple weeks, now will act as resistance.
Okay, let's go over here and talk some stocks, because we had some movers here after the bell and a lot of different news breaking. First, let's go to Yahoo, because Yahoo came out after hours, and they're saying there was another maybe potential billion customers, which I don't even know how they have even a billion accounts. Basically, all of their accounts could have been hacked. Spencer, what were the details?
I will tell you how they have a billion. I will tell you exactly how they have a billion accounts. We are talking about this on the news desk this morning. It's because everyone uses Yahoo for their spam email address. I have a Yahoo account. I use it for my spam email. Every time I have to enter an email for anything stupid, I don't want to see their stuff ever again. Yahoo. That's why I have it. That's why it exists. So that's why they have a billion accounts. But
if a billion accounts get hacked, though, does that mean every Yahoo account got hacked?
I don't know. But here's a question that was asked this morning by Shubs on the desk: is there any chance that like Verizon, that this deal doesn't go through? This is now the second time in a couple months. This has happened, or in a month. So is there any chance that like, this deal does not go through?
I think so. And you know why? Because they're talking different than they were talking last time. So here's the statement from Verizon just after this happened last night. So Verizon says that they will evaluate the Yahoo hacking situation. So they'll continue to evaluate. Before they came out and defended and said basically that, we're going to push this merger through. Now they're going to evaluate. So they're changing their tune here a little bit. Not as concerning if you're a Yahoo shareholder. Now, again, the majority of Yahoo's value is Alibaba. I think it's like 90% of it. You're talking like $4 billion. So you're talking 3 or 4 points probably if this deal falls apart. So it's not like Yahoo's going to go down to $30. It's still valued off of Alibaba. But right here this morning, you can look at Yahoo trading down over $1.30. So they're already knocking off, maybe 30% of what that value would be if the Verizon deal does not go through. So there is some concerns that this deal may not go through.
All right, Yahoo, as you mentioned, trading in the red here off the pre-market low of $38.99. Let's look where Yahoo has been here. Hasn't really been mentioned a whole lot on this show over the last couple of weeks, but you did break that $40 level. I will just give you one thing here, $38.99. That coincides with a low that you had back on $38.87. That was your low on November 14th. Let's see if it can find support. If it gets back again under $39.
I just want to add real quick that the Yahoo said that the data stolen did not include passwords in clear text, payment card data, or bank account information. So I'm not exactly sure what was stolen, but it wasn't that stuff.
They stole all your spam information, Spencer.
That's exactly
what
they did.
I just have to say, I do have a spam Yahoo account, too.
Okay, chat poll. How many, or if you're on Twitter, you can tweet at me, too. How many of you listeners out there have spam Yahoo email addresses? I have one as well. So we're 3 for 3 right here. My spam email, though, here's a Yahoo story. So I lost my Yahoo account 5 years ago because I used to use it for my fantasy. And I actually did okay in fantasy. I had a few trophies in there, and it was kind of cool. And then anyways, I tried to get access to it one day. I couldn't get it. I actually, called Yahoo, and I was trying to talk to them on the phone. They worked for 2 days. They couldn't get my account back because I didn't have, the recovery email. So I lost my Yahoo account. That was about 5 years ago, so I had to make another Yahoo email. So I lost all my nice little trophies on the wall, which was 10 years of, fantasy, which disappointed me. So, just because he had a hack last year, well, my account got stolen 5 years ago. So this might have been an ongoing issue a long, long time ago.
I think we are not in the minority in terms of Yahoo spam emails.
It's good for spam email. That's about it. Not Yahoo fans, but we're Alibaba fans. So if you own Yahoo, you basically own Alibaba. Alibaba is trading down a little bit here this morning. Just obviously moving down is probably some risk arbs or the arb players that
Ooh,
are
but
hitting Alibaba a little bit as they're buying Yahoo. So obviously, the majority of Yahoo is Alibaba, like we said. So that's why Baba is trading down 73 cents in the pre-market.
yeah, just a Baba alert here, $90 level. That it's been a key level. You did spike down. The low of the move was 87.88, but there has been three lows under 90 here: 89.96, 89.50, and 89.95. So that is a key level of support here, trading down in the pre-market. See if it can find support again. That would be, I don't know. There's actually 4 or 5 lows right in that $90 area, and Baba is the one. It sticks to these levels, so keep an eye on it.
Okay, jumping over to the food stocks. Did you see the move in Mondelez last night? So comes out. Spencer, give us the details. This is some German paper that reported that Kraft Heinz is going to buy Mondelez.
Swiss paper, or actually, I don't know if it's a paper or not. Swiss publication, Bilanz reported that Kraft Heinz planning to buy Mondelez. Remember that Kraft spun off Mondelez in 2012. That report was cited by Bloomberg. When Brent had noted at the time, actually, when he saw that, he never seen Bloomberg cite that source before. And what's weird is, like, immediately after that report, Reuters came out with their own report saying, nope, not happening.
Yeah.
So, I don't know.
Bring up that after hours Churchill, and we'll jump into this, because I was trading this and watching this after hours, and I could not believe how they were. I saw the headline break too, and and I'm looking at it, and I was like, well, I don't know that source. Like, this is a foreign source. I'm like, is this true? And I watch Mondelez go 45, 46, 47. It goes to $53 last night. I had a high of 53.06. What'd you have, Joel, for that?
I got a high of 54.89.
Holy cow. So in any regard, it's up over 11 points last night on this rumor, just a rumor from, from a foreign paper that, we don't even know if it's a trustworthy source. Maybe it is, maybe it isn't. But that's insane. So anyways, it pulls back down and, it starts trading like 46, 47. And then Reuters comes out and they had actually, went and spoke to Mondelez, and Mondelez denies it. Well, Mondelez sells off a little bit, but then it pops back up again. So I'm like, well, what's going on? They've denied it now, yet it's still up. And if you look this morning, even though it's been denied, Mondelez is still trading up 2 points on this. So I guess they think where there's smoke, there might be fire here. Maybe there's something to it. But $53 last night or $54 is ridiculous, because even if it gets taken over, are they going to get a 20% premium? I mean, they were basically paying the whole thing on a rumor. Whoever sold it last night at 53, 54, congratulations. That's a fantastic sale. They can quickly bring it in because it's 44.90 here right now.
Yeah, all right. As you said, just kind of
irrational exuberance.
Yeah, once again.
That's quoted by Alan Greenspan right there, Mondelez.
And Mondelez just hanging out here at $45, still trading up a few bucks. That was beyond the all-time high there. So if you caught the sale on that, congratulations. Dennis, I can't even do a lunch bet on this one. It's so far away, $54.89 as we have as the pre-market high.
And you know what else I don't understand? Okay, well, if Kraft's going to buy them, aren't they going to have to pay a premium? Yet last night, Kraft Heinz was trading up over 88 to $88 on this. It was up over 4 points. Why are you now buying the acquirer and the acquiree? That's a question to you, Joel. Why are they buying both of them last night?
Synergies, possible synergies.
And the synergies of bringing Kraft or bringing Mondelez back into the Kraft family?
I don't know.
All nonsense, man. This market is so irrational. Like, this is, okay, so now I'm going on a tangent. Now I'm, running into the pet peeves here. But it is difficult. Very difficult in news interpretation in this market lately, because you think it's good news and it's not good news, or you think it's bad news and it's not, or you see a rumor and it jumps 20% on you. Even looking at the other food stocks last night, so I guess and I'm looking at them, and I was actually trading a few of these things, so I got hit a little bit. But okay, all of a sudden, there's going to be a merger in the sector. Usually they move up in sympathy, but not last night. General Mills getting slammed on it. Kellogg's getting slammed on it. Campbell's trading down on this rumor too. I guess they figure if Kraft is buying Mondelez, they're not buying General Mills, they're not buying Kellogg's, they're not buying Campbell's. But this market is a tough one to figure.
It's all right. I'm having some problems here. What's the Kraft Heinz symbol? KHC?
Yes.
All right, they changed it so many times. Yeah, that
So
guy.
they changed it for 2
They
years.
do. They do. They
They did change it. I'll give it. It used to be Kraft, KRFT.
FT. Yes. All right.
Now it's KH. I like KRFT better, but I think they moved. Is it still on the Nasdaq or is it on New York? Let me go look.
No, it's
No, it
Nasdaq.
is still on the Nasdaq. They just changed to KHC. I guess when they merged with High Times, wanted to be part of it,
All right,
so I had to
well-
have the KH company.
While you guys figure that out, I'm gonna call Adam Sarhan. So we'll take a quick break and we'll grab Adam Sarhan of Sarhan Capital. See if we can talk to him about all this irrationality. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanan, along with Dennis Dick, also Spencer Israel. We have Adam Sarhan on the line, founder and CEO of Sarhan Capital and 50 Park Capital. Adam, how you doing today?
Excellent. How are you?
Good. So the Sarhan Capital, tell us about the 50 Park Capital.
Sure. So 50 Park Capital was rebranded. Sarhan Capital eventually will be morphed into that. So we have 50 Park Capital and we have 50 Park Investments. The idea has been to streamline our operation. So we offer services for the self-directed investor and also services for people who want us to manage the money for them.
All right, so let's get right to the trading action from yesterday. And I'm kind of old school here. When interest rates go up, it's kind of a bad sign for the market. Well, the market did respond here, still trading near all-time highs here. Give us your take on the Fed, Janet Yellen's testimony, and what's it going to do to the market? Are we going to go into another January like we had last year?
So it's very possible that we go into a January, February like last year. But to put some context with respect to the actual interest rate hikes and then the reaction from stocks, we're at 0.5%. So in other words, half of 1 basis point, 50 basis points. It's not even 1% on interest rates. That's extremely low from a historical standpoint. So investors have to put that in context because, yes, the Fed raised rates by a quarter point, but it's still extremely low. And with respect to the Fed being accommodative, they're still extremely accommodative because 8 years into a recovery, quote unquote, rates are only at 0.5%. So with, stocks could easily go higher. Actually, Bill Gates was on CNBC a few days ago talking about that exact point, about stocks are expensive from a valuation standpoint, but that doesn't really matter because rates have been so low for so long it's almost like the Fed is forcing investors' hands to buy stocks all over the world. So when you're an investor anywhere in the world with any sizable amount of money and you have nowhere else to go but U.S. stocks, that has been hands down the single primary driver of this entire bull market. And that, frankly, has distorted the playing field.
All right. So, we've talked about this too, just a historical perspective on things. Rates are still at extremely low levels. Forecast for interest rates hike in 2017. I think that's what got everyone in a tizzy back in January and February, that the Fed was on course to hike 3 to 4 times during the year. It turned out to be one only again in December. How do you feel the Fed's going to, take interest rates here moving forward, since that's the most important thing?
Yeah, I think that's a very good point, Joe. What the Fed's done for the last 8 years, it's played a game of chicken with the market. So it says one thing, but it does another. And what I've learned from this Fed, from Bernanke and Yellen, is to pay attention to what they do, not what they say. I have yet to find a time where the Fed has come out and said, you know what, things are really bad, and give a pessimistic outlook and say, yeah, we're not going to raise rates anytime soon, and the economy is just awful. What they do almost every single time is say, yeah, we're about to raise rates, we're data dependent. Or they hedge themselves in some way, shape, or form by saying, yeah, things are getting better, here's our forecast, our dot plots, or whatever you want to use. Things will get better in the next 12 to 24 months, and when they get better, to preemptively strike, we're going to be raising rates. And then when the market sells off, like it did this year, all of a sudden they back off and they change their stance. Instead of raising rates 4 times, they raised rates 1 time this year. And they've done that multiple times over the last few years, not necessarily with raising rates, but back a few years ago it was with cutting QE. We're going to stop QE, we're going to taper QE, and then when push comes to shove, every single time they back off. So until we see the Fed be in line, be in harmony with what they say and what they actually do, everything the Fed says, for me, takes a back seat, and what to the driver's seat for me is what the Fed actually does.
Adam, completely agree with you here. I mean, I don't even know if they look at the data as opposed to looking at the market. It's definitely so. If that is the case, if every time the market pulls back, the Fed's going to get more conservative and obviously help the market to come back here. How do you be short the market? How do you fight the Fed? Like, is there any chance this market is going to be allowed to pull back?
So that's a very good point. There's 2 thoughts there. Number one, there's an old saying by Marty Zweig, I recommend reading the book, called Don't Fight the Fed, right? And that was coined 30 years ago. What happened? His logic back then was the Fed's the biggest game in town, and whatever you do, don't fight them because you're going to lose. Now, in today's world, or in today's parlance, the way that works is that I know a lot of people that don't believe in this market and don't trust this bull market by the way, for valid reasons, and they can state them, until they're blue in the face, and they're trying to short. And they've been trying to short for the last 5, 6, 7 years. Now, to no avail. Sometimes they make a little money on a short-term pullback, but every time the market gets in trouble, oh my God, the market's topping out, we're going lower. Now, the thing that they're missing from their equation, and that's frankly, has never ever happened, and that's why prices are so distorted and valuations are thrown out the window, and even technicals to a large extent are out the window, because the Fed has kept rates so low for so long, that has trumped everything else. So going forward, to the second part of your question, the Fed had been aligned with with Obama for the last 8 years. To me, it's going to be very, very interesting to see what happens with respect to the relationship between Trump and Yellen. Yellen liked Obama, Obama liked Yellen, they were friends, and she did everything she could to help Obama, help the market, help the economy. If Trump and Yellen have an acrimonious relationship where there's friction or tension, I could easily see Yellen, and by the way, this is all speculative, I don't know what's actually going to happen because I don't know their relationship or what will happen in the future, but I could easily see Yellen become a lot more hawkish just because she feels like she's doing her job, and then she could change course and not care so much about helping the economy and helping the market at every single downtick in the S&P. So that relationship between the Fed and the market could shift if the relationship between the Fed and the White House becomes, I don't want to use anything bad here, but it becomes a little bit, if tension increases, how about that?
Yeah, that's a good way to put it. So you mentioned Mr. Trump here, and he hasn't taken over. Well, in January, and I was just like looking at the chart, and one way that I judge presidents or administrations is how the market did, and that did Obama, for whatever reasons, helped by the Fed. The market had a great performance. But, how are you going to judge Trump? I mean, here you are on the night of the election. The S&Ps had that incredible decline at nearly 2,000 in the S&Ps, rallied nearly 300 handles to 20, almost near 2,300. He hasn't taken office yet here. The run up of some of these stocks that start with like U.S. Steel and things like this. I mean, are these justifiable moves based on the new administration?
Sure. So that's a very good question. There's a few thoughts. Number one, you and I both look at markets, actually look at the world a very similar fashion, and a lot of the audience also, where it's market-centric. In other words, we judge things, outcomes of events, good or bad, based on market performance. It's better or worse, but that's just the way we function, because you can't argue with price. It's either the price is up or the price is down, and that's just a fact. Now, we judge Trump. We're 8 years into a bull market. That's the first point. So every bull market in history has had a definitive beginning and an end. Irrespective of who's in office, every bull market, there's normal natural cycles, and they're followed by bear markets. So eventually this bull market will end. It's a matter of when, not if. So that's the first point. Keep that in mind. Like, we're going to get into a bear market at some point in time, whether it's this year, a few years from now, even further out, who knows? But the reality is that eventually this bull market will end. That's number one. Number two, Trump can go in there with a lot of policies that are pro-growth and wants to cut rates, taxes, and all that other fun stuff to stimulate the economy and get things going. But will it actually be implemented without any opposition from his party and also from the Democrats? So will he be able to actually follow through with a lot of the grand gestures that he wants to do, which, by the way, could be very stimulative, could be very good for the economy, could help a lot of people. And if you cut taxes like he wants to cut taxes, that in and of itself could be a massive boom to GDP and to the rest of the economy. So I'm not sitting here saying policies are good or bad. All I'm just saying is that if he's able to actually implement them, that's the second big litmus test with respect to him actually being able to implement his policies. And then the third point, to answer your question, if he does get into a bear, in other words, if the market does fall and his administration's in power and he's doing quote unquote good and he's doing what he wants to do and the market's down, that doesn't necessarily reflect poorly on him just because of the fact that he's taking over at in a late stage of the market. So I don't necessarily want to judge him based on what happens in the short term in the year or two in the S&P because there's lots of other factors that come into play. Now, if the economy falls off the bed and then the market falls out of bed and then everything just enters a massive type of decline and we enter an '08 type of a panic state and, things just fall out of bed, that's a complete different outcome. But just a small pullback in the S&P, whether it's 10%, 15%, even 20%, I don't want to necessarily, say, oh, no, Trump's fault, he's a bad guy type of a thing. I don't think that's fair.
We've been on the line with Adam Sarhan, founder and CEO of Sarhan Capital and 50 Park Capital. Also, Adam helps us bring in some of our wonderful guests that we have on the show. Adam, thanks for coming on, and we'll get you on in the middle of January and assess the market then.
Sounds great. Thank you, gentlemen. Happy New Year.
All right, S&P futures trading down 3 at 22.49 off the lows of the pre-market session, 22.43. That's your number on the downside. That was your low from yesterday.
Looking here at imbalances, AT&T 100,000 to sell this morning. Alibaba 61,000 to sell. Again, probably pressure from Yahoo. Disney 66,000 to sell. MO 32,000 to sell. Hewlett Packard 81,000 to sell. Financials again showing the light. So it obviously from the if interest rates are going up multiple times next year. Good news for financials. They were the ones showing the light after the report as well, after the Fed report. So Morgan Stanley is looking at 47,000 to buy. A couple other ones with buy balances, but they're all trading higher. Goldman's trading up over $1. Bank of America's trading up 0.75%. JP Morgan is trading up 0.5%. Citi. So if you're looking for life here this morning, it is in the financials. They are looking stronger.
Yeah, I just was watching the trading action in Bank America yesterday, and the triple top has turned into a quad top, Dennis. You got a rally, made a new high for the move at 23.30. So that's the fourth time that it's went up there, backed off to close, off that level, trading up in the pre-market here. But certainly someone's making a stand there at that 23 and a quarter area. We'll see if it just turns out to be another breakout to the upside or finally get a pullback in the issue. Earlier in the chat here, our new guy here, Go Lube K Dan, was asking about Adobe, who reports after the bell here. Man, the stock has had a nice run, came off, filled the gap here. I guess if you're going into earnings here and you're looking at some profits, might not be bad to book them. Could always go either way. Good resistance here at 108. I see we almost got there 2 days ago, and double top back there from November. Dennis, any thoughts on Adobe?
We had the gap and go last earnings report, the gap up, and then it continued to run after that. So keep that in mind. If they do come out with a really good quarter there and it does gap up, it doesn't necessarily have to fill the gap. NVIDIA was another one that had a huge gap and go. So we have seen some love for some of these tech stocks when they're blowing the earnings away, but it all depends on what it said in the report tonight.
All right, I'm on the pain train and NVIDIA here a little bit. The last few times it's made a new all-time high. It's pulled off quite precipitously, so we'll see what happens. Made a new all-time high yesterday, trading up 40 cents. I was trading up over $1 in the pre-market here, so a little egg on my face in this one.
It's been a monster though. Obviously, you start thinking about the $100 psychological level when you're only 3 points away from it. You wonder if it's going to act like a bit like a magnet. Just a couple other stocks here on the notes to talk about. Eli Lilly is getting a nice pop here this morning. They came out with guidance. It's been coming back. We were talking the charts that the charts were setting up a little bit there. I did not pull the trigger on it, although I didn't mind the chart. Yesterday, a little bit of a down candle. Today, it's getting up into that gap area because they announced some guidance this morning. Spencer, what was the details?
My approach just went down, so hold on 1 second, I got it for you. Eli Lilly had guidance yesterday. They see their fiscal year 2016 EPS at $3.50 to $3.60. That's in line with the $3.52 estimate. Their fiscal year 2017 EPS is $4.05 to $4.15. Estimate was down to $3.97. So good fiscal year 17 EPS for Eli Lilly.
Lilly, $70 here, Joel. What do you do? Buy or sell?
In
your opinion,
big move here. Pre-market high 70.50. You are getting into the gap. Just my first instinct here would be, maybe a lot to shorter term players here might be looking, that it bought it in this accumulation phase. If we get through the pre-market high, then the sky's the limit here. The pre-market high is 70.51. Let's see if it can get there. Do I expect it to fill the gap today? No, all the way under 76. So it's working its way through that area here. So I don't know, short term resistance there, but as you can see on the chart, not a whole lot.
Also, Eli is holding a guidance call at 10 a.m. Eastern today.
That's always good.
If you want to tune in.
And real quickly here, before we go to our next guest, FLO. We're at Flower Foods Incorporated here. That had a nice move a few days ago from 17 to 20. Not sure what got that going, but trading up here. Rumor of a takeover?
I think so. I'll just go grab the headline if you want from the Trusty Benz and New Pro. But yeah, it was, what day was that, the 9th?
Yeah.
So it was a settlement. That had reached settlement. I guess there was some type of lawsuit or something going. They were only going to pay $9 million, and then they popped in on that.
Yeah.
So it wasn't rumors. It was off some settlement. And then this morning, the reason it's lifting this morning is KeyBank has upgraded the stock.
All right, there's a big level there. You want to see it cleared 1995 or 20. That was a monthly highs a few times earlier in the year, so want to see it get over there and keep on going. All right, we're going to take a quick break here, and we have a real good guest coming up. That's Tracy Shookhart. She's an independent commodities trader. One of our chat members suggested I contact her, and we're going to talk a lot about oil with Tracy. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, and we have Tracy Shookhart on the line. She's an independent commodity trader with emphasis on energy and crude oil. Tracy, how you doing today?
Good. How are you guys doing?
Well, we're doing pretty good. So we found you through one of our listeners, Flack UK, on Twitter, and he said you were pretty good calling the oil markets. But first, you got an interesting background. Tell us how you became involved in the oil energy markets.
I studied Mideast politics and international relations in college, and didn't really do anything with my degree. And was in actually the medical supply industry in California. Hated it, so quit my job and moved to Chicago to get into this industry. Having no job, knowing no one, just up and left, and that's kind of where I started. I started knocking on doors and got a job at a total boiler room brokerage, and moved my way up from there. So spent a few years in brokerage, managed futures, then I worked on the trade floor for a while, and then independent private equity.
So it was your background in Middle Eastern studies that attracted you to the energy and crude oil markets?
Yeah, pretty much. I mean, I've been studying it my whole life, really, and now I just found a way to actually utilize the degree and my interest at the same time, so it worked out.
Right, and make some money. So let's just get right to it. I mean, crude oil here. Obviously, we're Middle Eastern studies. You interpret what's OPEC's doing here. I've been a little opinionated, like who's going to check up on these guys as far as limiting the supply. You mentioned, Russia. If they shut down some of the pipelines in the winter, they freeze up. So, give us how you approach the crude oil market ahead of the meeting and now how you're trading it after the meeting.
Well, I mean, ahead of the meeting, obviously, I really and had always said it was going to be buy the rumor, sell the news kind of story, which is kind of turning out to be. But it's true. I mean, a lot has been going on. A lot's been said about this OPEC, NOPEC meeting. But really, any agreement, first of all, is non-binding whatsoever. These are sovereign nations. Everybody forgets about that. So, they don't really have to. It's a word. It's their word against every other country's word. And another thing that they didn't really address so much is really it's not so much a production issue, but an export issue. So if they produce less, but they're still exporting the same amount, then the supply on the market hasn't changed at all.
Excellent point. So who checks up on them? I mean, how do traders or investors, actually know, what these are, is it the oil inventories that come out on Tuesday and Wednesday? How do we know?
Well, oil inventories on Tuesday and Wednesday are solely U.S. inventories, but I mean, we don't really know. We can, there are several places that track this, but there's secondary sources and there's primary sources. So this whole time they've been arguing over what does Iran say they produce and what do secondary sources say they produce. And this is where, that's why it's taken 2 years, basically, to come up with an agreement that's 6 months long. They do say OPEC will have people overseeing this, but that remains to be seen.
All right, and so how do you do? What's your time frames for trading? Do you like to do some intraday scalping? Do you like to do some swing trading, some spreads? How do you approach the oil markets?
Yeah, I mean, personally, I have 3 different accounts. So I have a swing account, then I have an intraday day trading account, and then I have a separate account for options and spreads. So, for instance, before this OPEC meeting, when things were uncertain, I was not in outright. I played it with options. So it was just, a safer approach.
Okay. Do you is it hard for you to if you have a short-term opinion and a long-term opinion between those accounts? Is it hard for you to just keep it separate? You want to be short the thing, but there's an OPEC meeting here. How do you keep different hats on with your different accounts?
Well, I mean, generally, if it's a swing account, I'm just looking for bigger long-term levels with more of the fundamentals factored in, right? And I kind of just set it and forget it and, just keep moving my stocks. And intraday, really, the system I use is completely technical. So it's just trading level to level, and I take the same trades over and over again. So it doesn't really matter what news comes out or, what's going on. It's literally purely a technical trade.
All right, just overall here, Ed Parker in the chat, he thinks that, wow, USO chart looks like it wants 15, trading at 1132 here. Boy, I don't know what that would equate to in the crude oil market, but any thoughts on that, on the USO going to 15? What would you need crude to go to 60 or 65 to see that level?
Yeah, that probably would be around 65. I mean, right now, to me, the outrights, the CLF contract does not look. I know everybody's really bullish on it, but so far, I don't think that we've seen the downside yet. Today is also OPEC. You have to remember there's so many calls right now between 49 and 55. What they're going to try to do is kind of screw these people out. I mean, that's what they do, right? They're going to screw these people out of their options. So I've been short now for 2 days in expectation of this move exactly, just by looking at options positioning.
All right. Tell us about your methods of technical analysis. Do you have any favorite strategies or candlesticks, Bollinger Bands, or are you just kind of straight to the book?
Mine's a kind of a proprietary level-based system, but it's based on rotations and Fibonacci. So I don't use oscillators or Bollinger Bands or anything like that.
Yeah, you keep it.
I strictly watch order flow. So I watch order flow, market profile, and crude rotations with fib levels.
All right, out of the chat here, and I know I told you I wasn't going to pepper you with a lot of equities here. Is Apache Corp one at all that you follow, or no?
No, actually they're not. I mean, I can give you a couple that I'm kind of looking at right now. Would be NBR.
Okay.
They just did a huge deal with the Saudis to provide them over the next couple of years with over 50 rigs. Another couple companies I'm looking at is HCLP, which is a sand company, PDS, which are drillers, RBC, which are drillers, and RIG. I think a lot of these bigger companies, a lot of these companies right now are so debt-laden that any profits that they're going to make are going to be put back into debt repayment. So when I look at, companies that I would be interested in, I'm looking at companies with, little debt that are currently undervalued.
And so you just think with the oil being in, maybe if it doesn't go down to 40 or necessarily doesn't go up to 60 here, with the price perhaps stabilizing at the $50 level, then, maybe some of these drillers can pick it up, come back online again?
Yeah, definitely. I mean, they're also looking, like in the case of NDR, they're also looking at, providing rigs overseas, so they're not just sticking with the shale market. But yeah, I mean, around $50, and I've been saying people are underestimating the resiliency of the shale market. Already estimates are coming in that are over, for Q1 and 2 are over what they first estimated for the entire year. And I've been watching shale slowly come back. I mean, we're still negative on production, but less negative.
So where are you looking to bring in this short here in the crude oil futures? Are you looking for that psychological $50 level here, or do you just use trailing stops and let them take you?
Well, I'll use trailing stops for right now. The first level of interest to me is 49.60 and then 48.50.
All right, and let's see. I was actually looking at some of those numbers too. The 49.61, well, that was your daily low on December 8th, and then what was the other level that you gave?
48.50.
Oh, okay. All right. Well, there's
48.50. We're going to run into, at 48.93, we're going to run into the quarterly VWAP. So that will, I would expect a bounce there as well.
All right. And if you guys want to follow Tracy on Twitter, it's Shy Girl, and that's CHIGRL. You can follow her on Twitter if you like to hear more what she's talking about the oil markets. Tracy, I'm really glad we got you on here, and we're going to be following this closely, and hopefully we can get you on again soon to follow your thoughts on the oil market.
Yeah, definitely. Thank you.
All right, Tracy Shookhart, independent commodities trader, going after the energy markets. Dennis, you still kicking around there?
Still kicking around, having a little bit of audio difficulty on my end, but I'm glad the show's coming through okay. Just speaking about the energy market here, oil is starting to get hit here, so that's good news for Tracy there. Oil is now down. USO is now down 1.28% here in the pre-market, so just quietly continuing to roll over here under pressure. Obviously, yesterday not good here either. Joel, just give us your quick technical take here on the USO.
USO?
Stick with the USO because a lot of people like to trade the USO.
Yeah, boom. Let's go to the daily chart. I mean, the trend is your friend here. Let's go back. A lot of air in here. Maybe you went from 9.5 to 12. What's that? A 2.5 point move. 1.25, 10.25. Get you back in to fill that gap area here. So I think that's what I'd be, leaning on with the short here. Or if you're stuck long here, now that you got up near 12. Going to find sellers here if you get any kind of a rebound. And actually, when I was talking to Tracy last night, she was talking about the run up in the OPEC and in the oil, or the run up ahead of time, and I think she called it one of the easiest trades of her life. So she's enjoying that one. 8:49, Dennis. We are just trading up here, just down a half a handle, bouncing around pretty good. Any significant ratings changes?
Let's jump over to them because there was a few here that were of note. I'm just going to bring up the Benzinga Pro ratings changes here right now. Alaska Air is getting up or just initiate overweight here at Barclays, but just run through them here. There's not a ton of huge ones here, but there's a few of note. AMD catches an upgrade at Morgan Stanley. Ace will probably be happy about that. GIS downgraded at RBC Capital. They're all pretty small. There's a few initiations, but nothing really. Xilinx, here's a big one. XLNX is getting upgraded here at Morgan Stanley to overweight, and that stock has been a monster. Xilinx has just been running and running. Kramer was pumping it last night on Mad Money as well, and it's trading up over 2% in the pre-market. Maybe quick technical thoughts on XLNX.
58.01, that's your pre-market high, and I think that is an
all-time high.
Yeah, all-time high by over $1 here. So we'll see. I mean, this clears another whole number, 58. Can just keep on going. Big run up. I mean, for me, I'm not a big one to chase moves like this. I'd be more inclined to see if it could come back in. XLNX, the top of yesterday's range was 57.19. So, wow, looking for a gap fill there. RMH is asking about NVIDIA. Just got that upgrade yesterday. The whole street is loving this thing, I guess, except for me. Just trading up the pre-market, maybe off that AMD upgrade. 97.11 was your high from yesterday. I think I may end up eating some crow on this one. Pre-market high in NVIDIA. I think I saw it up over a
been a
dollar,
monster.
97.65. I mean, I was hoping for this pattern where it made a new all-time high, pulled back, made a new all-time high, pulled back, but this time, Dennis mentioned too, it's may have triple digits on the mind, and that will not be good for me.
A couple other stocks, just jumping over to the energy sector here. And this is interesting. SGY Stone Energy files for Chapter 11 bankruptcy after the bell. Always interesting when the stocks don't really get killed that much. I mean, it's down 25% here. And maybe, you're just looking and maybe they think there's going to be some value here at the end of it all if there's a restructuring plan. But, I mean, when you put it in perspective, the stock was $200 last year. Now it's $4. But, a lot of times you think bankruptcy stock at zero. In this case, it's not the case right now. SGY is actually holding up okay despite filing for Chapter 11 bankruptcy.
All right, and boy, ORIG is trading down here, so
they're all concerned. That's all in sympathy with Stone Energy. So a lot of these smaller oil companies here are obviously hurting here today. And I think ORIG was one that was talking about filing for Chapter 11 here too. It's just, don't you find it interesting? I think logic. I just think bankruptcy. Okay, well the shares are worth zero. But that's not always the case.
Yeah, whatever assets that they have may be salvageable here, but ORIG, I see that trading down at $1.54. Had a nice run up, got up over 280 on what was that on Monday, and now back at the 150 area. Crude bearing down here on the $50 level, trading down 95 cents. Interesting how, Tracy mentioned, the call buyers, she's looking at the open interest and, in these kind of runs, I mean, in these stocks, and it's very, very hard, to sell in a rally, you think, you're going to have the profits forever, but if you don't catch these commodities or even these stocks, when the momentum is going your way, much tougher to sell on the downside. Crude trying to stay above $50.
We had one earnings report of note last night. Pier 1 Imports is up 21% on their report. PIR. Spencer can give us the details on what Pier 1 said in their report.
Q3 EPS 22 cents versus a 12-cent estimate. Revenue 475.9 versus 466 million. So good job there for Q3. As far as Q4 goes, they see EPS 28 to 32 cents. 21 cents was the estimate. And then the EPS for the whole fiscal year is 37 to 41 cents. 26 cents was the estimate. So a beat across the board.
This is a big pop here. This is a 7-day double. This stock was $4 7 trading sessions ago. It's now almost $8 here. So basically doubling over the course. No, I'm wrong. I'm sorry. I'm looking at the wrong timeline chart. I had it on a monthly chart. I was like, no, this is not a 7-day, but it's a one and a half month double. So a month and a half ago, we were down near the $4 area. Now we're up at $8.
Dennis, I'm thinking here, $8.24.
You got a bet?
8.24. Well, I know you won't take that it will close over 8, right?
No.
I'm
not. I'm the Wicker share company here, whatever it is, all the Wicker stuff they sell there. No, I've been eternally bearish this thing. I've been wrong for a few years, but I'm starting to be right again.
8.24. I was going to say the high could be in it on this one, but I see you're not. You're not biting on that one.
No.
S&P's turned positive here, up $1. Financials leading the way. Goldman Sachs up $1.39. Bank America here up 27 cents. Got the interest rate hike is good. I mean, big day for the market here, Dennis. What do you think? A day after a Fed decision, a lot of volatility here. I think it's going to be an interesting session to see really, what the big money thinks of this interest rate hike.
Yeah, it's a huge up move here for the financials today. That's what's driving it. Even overseas are up a little bit, but our financials are up significantly here. But you know what else had a good day yesterday, too, was the drug stocks. So a lot of them were up again yesterday. I know we've been talking about them, been on a 3 or 4 day run. That did continue. Some of them settled kind of weak, but they were all up substantially before, earlier in the day anyways. So interesting, that So you're still seeing rotation happen. But as money starts to rotate back into the financials hard, you start to see it come out of a few different sectors. Obviously, you're looking at bonds here. If interest rates are going to be going up next year, maybe the bonds start to get hit. They got hit pretty hard there yesterday. I know the TLT is trading a little bit higher here this morning, but you just start to think that trade might come back into play where you start to sell the yield stocks if we do think interest rates are going up a lot next year.
All right, and let's just take a look at just a real quick here. Look at Apple here, trading down 14 cents. That's been pretty strong as of late. Dennis, any thoughts on Apple?
Still like it long term. Still one of the biggest positions in my investment portfolio. Short term, it's been pretty hot too. I mean, we've been up 6 days in a row here for Apple. I think you got major resistance once you start getting into the upper teens, though, say 116, 117. Lots of highs up there. So if you're looking at this from a shorter term trading perspective, I think it's run a little bit too far here now. I like to back under 110 from a short term trading perspective. Longer term, I still think it's one of the best value stocks out there.
I got a couple of things before we wrap up for the day. I want to note that tonight at midnight is the deadline for Carl Icahn's tender offer for Federal Mogul, FDML. He's got an offer out there that I believe was extended, if memory serves me correctly. I think he tried back in November to bid for this company. So his deadline for the offer for that is tonight. So we could see some volatility today and tomorrow around that. Also, and I mentioned this like a month ago, but the Star Wars trade, if you look at Disney over the last 2 months, because Star Wars comes out today, and look at Disney over the last 2 months.
It's been running. That's a great point, Spencer. It does. It seems to run up ahead of these Star Wars movies. I'm hearing bad reviews about it, though. I read a New York Times review. I was looking at another review. So people weren't really loving it here. So I'm somewhat concerned here about buying Disney ahead of or now because it's run up here. And if this movie gets some more bad reviews coming out of it, and I'm a big Star Wars fan, so I was disappointed to read a poor review there. Maybe I'll like it. Obviously everybody has their own opinion, but I'd be concerned if I'm long Disney here if it gets more bad reviews.
I've heard it's grittier. It's grittier than what we're used to, which I'm looking forward to. But yeah, I'm not saying I told you so, Joel. But yeah.
All right. Before we wrap up, Mark M here has asked about X, and that stock is pulled off here. And I kind of have a number for you on this one, Mark. You had a high of the move at 39.14. 2 days later, you were $5 lower. You had a low at 34.18. So you know how I like my 50% retracements. 5-point move there. You add 2.5 to that. That takes you right up to the 36.70 area. 36.86 was your high in Thursday session. So that's the hurdle to clear. Above there, maybe run back up and get to that highs at 39.14. But if not, man, we sink down and maybe back to that $34 area. So keep an eye on that high from yesterday in X. All right, 8:59. Folks, we got through the show here using Google Hangouts. Spencer, you want to wrap things up?
Couple guests on the docket for tomorrow. First, Fari Hamza. You know him. He's Hamza Analytics. But then, after Fari, we've got Nigam Arora of the Aurora Report. And he's a new guest.
He had talk gold and silver.
Yeah.
I wonder what he's thinking now.
So looking forward to having Fari and Nigam on tomorrow's show. If you missed any part of our show today, catch the whole thing again. It's on YouTube, usually around like 10 minutes or so after the show ends, and then post the podcast at an hour or so later on iTunes, SoundCloud, and Stitcher. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. And that's it for us today. So I hope everyone has had a good morning so far. Hope you have a good rest of your day. We'll be back with you folks tomorrow for our final show of the week with Fari and Nigam. Have a good day, everyone.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.